What do we do on weeks like this? What happens when it seems that everything's circling the drain? How do we position ourselves, and how do we, most importantly, protect ourselves from the downside? I'm Raghee Horner, and I'm going to be walking you through what I have been doing this week to keep my head above water. And actually, depending on how Friday goes, I'm recording this on Thursday afternoon, I'm going to end the week ahead. Now, let's talk about how we can handle weeks like this. And the first place we want to start is, what are we going to trade, right? So is it going to be the S&P via the ES futures, the SPY ETF, or the SPX? Bottom line is, choosing one over the other isn't a tactic as much as it might be a preference, right? Now, I might say SPX might be a better place to focus on selling premium. SPY might be a better place to focus on buying premium. And my futures traders are going to prefer ES. But we've probably already figured out, Rog, I'm an XPX trader, or Rog, I'm an ES trader, whatever it may be. But before that, in a lot of ways, before we settle on whether or not we want to trade the S&P or the Dow or the Nasdaq or even the Russell, let's think about time frames. So what I'm taking you through is the process that's going to allow me to very likely finish the week out ahead, which on a week like this might seem like a pipe dream, but in reality, what I've been doing this week is mapped to focusing on relative outperformers. And I know that's a phrase that's repeated so often it almost doesn't mean anything anymore. But the bottom line is, if we focus on that, I'll take you through 2 trades from today, how we found them and how we can continue this process, not only as day trading, but also swing trading, and what I like, right? So let's take it from whatever your preference is. For example, the SPX or the SPY or the ES futures, the question has got to be, is it a relative performer today? Or is it a relative performer this week? And don't worry, I'm going to show you how I do that. So first of all, today, what did we do? Today we actually had a really great morning day trade in the Russell. Is the Russell my favorite futures contract? I don't have favorites. That's something I purposely try to do. I don't try to start off the morning saying, what can I do with the QQQ today? Or what can I do with the SPX today? Not at all. I ask myself, what has the best structure? Where is the relative performance? So you might say, well, Rog, how on earth would I know that? How do I do that? Really easy. How do I know the Russell on any given day is likely a relative performer or has the kind of structure that's going to allow me to buy a zone after the bell like this and take it up to this red zone? Now, these are daily price movement ranges, by the way. So how do I know that's likely? Well, first of all, I need structure. If you're not already prioritizing trends, and by the way, this is the multi-trend down here. I know a lot of you have this. If you're not already prioritizing trends, start there. Don't prioritize. I never prioritize a non-trending market. I want to exhaust all possibility in trending markets first. And it doesn't matter if it's a 5-minute chart, a 1-hour chart, or a daily chart, which, by the way, are the only 3 time frames, for the most part, I actually trade. Each one has a job. We'll get to that as well. So if I'm looking long the Russell, there is one very important symbol that has got to be in agreement with the Russell, and that is regional banks. This is the #1 weighted sector in the Russell 2000. If regional banks have that same bullish, take a look, structure, right? The probability is for more upside in regional banks. The Russell, this could be the IWM, this could be the RTY as I just showed you, the RTY futures, or the KRE. They're going to follow through, and that was the best trade and the best structure of the morning. And it's setups like this that have allowed me to handle weeks like this. I'm not looking for follow through overnight. I'm not looking for follow through for days. If we get a follow through for maybe half the session, if I get follow through for an hour and I can get in, manage risk, and pay myself, that's exactly how I have to operate on a week like this, right? Like a ninja. And that's when I ask myself, all right, am I focusing on the right expectation for follow through? This is not the kind of environment to think that a trend's going to continue up or down, right, for days on end necessarily. All right, so then the next thing I want to ask myself is, which time frame. So we talked about relative performance. We've talked about day trading and why certain sectors might lead to better follow through in an index. So the common question is, all right, Rog, do this for the SPY. And why didn't you perhaps trade the SPY? All right, so this is the S&P. So you might say, Rog, it didn't look too bad. It's kind of greenish, right? On the open, we saw kind of greenish. No doubt, no doubt. Okay, fine. That's one place to start. So you can see on the bell, it just kind of went neutral, but it was greenish pre-market. Well, that already falls second to what I was seeing in the Russell. What is the way in which I'd see the likelihood for follow-through based on the sector? All right, so the way KRE and Russell move together, what are those connections for the S&P? It actually starts with tech. It actually starts with XLK. Right? So XLK looked a lot like the ES, green pre-market, neutral shortly after the bell. This is tech. This is Apple, Microsoft. All right, XLF would be the next place. XLF is Berkshire Hathaway, JP Morgan, Bank of America. And once again, kind of neutral, wobbled green, but not a terrible place to look. But once again, if I'm prioritizing where there's follow through, I can't have favorites. So already I'm not seeing a lot of expectation for follow through to the upside. And healthcare has been kind of weak to choppy. So one thing is, Rog, why is there only one sector for the Russell? Because the Russell is not organized in the same way the S&P, the Nasdaq, and the Dow are. There are a number of sectors that have pretty equal weighting, so no one really stands out except for the Russell and the regional bank connection. Unlike the S&P, where I'll look at tech, financials, healthcare. Well, then what about the Nasdaq? And by the way, the best trading days for the S&P, because that does seem to be most traders' preference, right? Please don't trade with a preference, but if you are going to prioritize the S&P, make sure you can see the connection between it and the Nasdaq or it and the Dow. Now, if all three are moving together, fantastic. That's going to lend itself to better follow through. Nasdaq, same situation, very neutral on the open, slightly bullish, but then neutral. And we already saw what XLK did. XLC, now this is Meta and Google. This is definitely a warning. While communications don't have as much an impact on the S&P, they will. This is Meta, this is Google, and a bunch of stocks that are typically reserved for more telecommunications interest. But if this is red, this is going to drag mostly on the NAS. The third sector for the NASDAQ, XLK, XLC, XLY. Take a look at XLY. Consumer discretionary. This is Amazon. This is Tesla, right? So if I don't see clarity in the sector, what chance does the index have for follow through? And this is a very different perspective on indices, because for most traders, they look at this thing called a unit of the NASDAQ. I used to too, until I really started thinking about how high concentration weighting affects everything. That's why earnings season can feel like this week, because an individual stock can move the broader sector and the broader index. This is tail wags the dog season. If a high concentration weighted stock like Apple, Microsoft, Amazon, Nvidia within the NASDAQ have an outsized price move, as is often the case during earnings season, we're going to see these big moves. And those big moves mean one stock can move the broader average, and then the broader average in turn affects the other stocks within it. It's an unusual relationship. It's not the top-down index sector stock. It's the tail wags the dog. An individual stock can move the sector, and then the sector moves the broader average, whether it wants to or not. So think about the weighting. This is the way that I visualize the weighting. I take the index or the sector, and then the top 11 names, and I study each one of their trends. If you note here on the daily time frame, Tesla is the lone stock within the NAS in a downtrend. All right, back to, well, actually, let's summarize real quick what I've talked about so far. What time frame are you looking at? What's working for me right now is day trading. Short term, as we mentioned before, maybe the first half of the morning, maybe half the session and not relying on day after day follow through. So maybe a 1 to perhaps 3 day time horizon, but really it's really been more of a 1 day time horizon. The only swing trades that I've put on with overnight exposure this week have been 2 winners in the Dow and 1 in the Russell. And Dow and Russell, why those two? Well, if you want to circumnavigate the volatility of this particular week with all the tech emphasis, go where the impact is the lowest. A lot of times we want to go right into where the party's at. We want to go right into where the volatility is at. And while volatility is great, no doubt, in fact, if you haven't already checked it out, on Tuesday, I did a really in-depth video. You can find it at the Simpler Trading website on YouTube, or the Simpler Trading YouTube site, and take a look at Microsoft and Google earnings step by step. I walked through Microsoft, Google, and I believe it was Visa, right when all this was happening. And I walked you through the process of my 642 earnings window. So if you're curious, okay, Rog, but what if I want to play earnings? When is the window for that opportunity? Check out that video. In 15 minutes, you will learn everything you need to know about how I trade earnings. So definitely check that out. YouTube, Simpler Trading, and this is the title of the video. All right. Okay, so back to what's working this week. What's working this week, when I look at my winners, it's not trading the tech names. It's not trading the sectors that are most sensitive to tech, Nasdaq and S&P in that order. It's been Russell. It's been the Dow. Now you might say, well, okay, Rog, what about looking ahead? Okay, I know how to get through week to week. I gotcha. I'm going to day trade. I'm going to have a shorter time horizon. I'm going to find the relative outperformer. I'm going to confirm it with the sector. Gotcha. But then what's next? What is happening right now? If we take a look at a 5-day relative outperformance, and this is how I'm going to guide the trades that I take not only to wrap up the week, but into next week. The last 5 days have shown a lot of defensive activity. XLU, number 1, XLP, number 2, XLRE, number 3. These are the 3 defensive corners of the market. That means right now money is scared. You might say, Rog, no kidding. But it always does not lead to these 3 outperforming. Sometimes there's broad risk appetite and there's broad risk aversion. So then you might say, well, if I'm looking for strength, Rog, what does it map to next? Basic materials, financials, industrials, healthcare. All right, Rog, what do I take away from that? What should I focus on? Really easy. Dow. Not my favorite index coming into the week, but when I see relative outperformance, I'll take basic materials out of it. XLF, XLI, and XLV have the most weighting in the Dow. This is YM, this is DIA. Now, the other thing I can keep an eye on is KRE. If XLF is strong, typically KRE could follow along with it. So trade what we see, not what we wish was happening. We trade the markets we have, not the markets we want. And as much as I think a lot of us want to trade tech in the Nasdaq and want to trade the S&P, that's not where the follow through has been this week. So I hope this process is one, and this is the same thing that I do day after day, week after week. Are the sectors aligning with the index? What's the relative outperformer? And then if I want to break it down from an index perspective and sort of work a little backwards and say, all right, knowing what I know now on a Thursday afternoon, where is the organization? And I'll tell you where it's not right now, which actually really disappoints me. I love generally oil services and the energy sectors because crude oil has been, generally speaking, a really strong commodity. And it's not right now. So as much as I want to trade this, the relative performance is saying, Rog, let it wait its turn. This is Oil Explorers, by the way. So this is telling me, while it's something we can do, 2 things. Either lengthen the time frame to a 1 hour, maybe a daily, so I can absorb some of this short-term 5-day relative performance, right? Or just wait. So let's actually take a look. So crude oil has largely been one of the stronger commodities. And by strength, I mean it has seen time in an uptrend. So I'm going to kind of move the 1 hour and the 5 minute aside. It's above the 200 right here, these white dots. That's a big deal. That's the equator, gang. That's a 200 exponential. It's been bouncing from that level pretty well. It's overall holding its own. So if I want to focus on a long position in XLE or crude with the price action above the 200, which suggests there's better chance of this following through to the upside, I can either go to XLE on a daily or XLE on a 1 hour. I can go to CL futures or the USO ETF alternative on the daily or the 1 hour. And actually crude oil is setting up today. So if crude oil heads higher, it's likely going to take the likes of XOP. This is your oil and gas explorers, your oil services. This is Schlumberger, Halliburton. It's likely going to take these stocks with it. But let the futures contract go first. If there's risk appetite in crude, oil stocks are going to benefit. So that's one way we can look at where relative performance may be slightly longer term. But right now, it is not getting much love. What else isn't getting much love? What else is at the bottom half of all this? XLK, XLC, and XLY. Those are the three cylinders of the motor we call the Nasdaq. So while I would love to eventually get long the Nas, this is not the week for it. Right now, and this is where my trades have been best, it's been Dow and Russell. And it makes more sense when you see the components inside and say, oh, right, energy's not doing well, tech's not doing all that well, but the components of the Dow and the Russell are. And that's where I focus my attention. So again, I don't trade my favorite symbols. I try not to have them. I don't trade my favorite time frames. Again, I try not to have them. But in environments where there's a lot of uncertainty and fear, one of the easiest ways to find winners, get in, get out, is going to be on a shorter term time frame. And that right now for me has been, for the most part, 5-minute setups, day trading the morning for about the first 65 minutes and then being done. And then maybe looking for a 1 hour swing where I can get maybe second half of the day follow through, maybe very limited overnight follow through. So this isn't just for this week, by the way, gang. This is how I trade week in and week out. So at the end of this month, by the way, I'll be sharing my overall results. I did this for August, did this for September. I don't mean a few trades or a week. I mean, what did I do with my day trading and my swing trading for the month of October? I will tell you this right now, not as to be a spoiler, it's nowhere near as great as August, where I was up 94%, and September, where I was up 90%. Nowhere near that. This has been a much, much tougher, more volatile month. So I'll share with you the good, bad, and the end results of that likely next week. That'll be the first week of November. I'll have some time over the weekend to run all my trades through TradesViz, and we'll take a look at the results. All right. Hope this is helpful. If you have any questions, by the way, for those of you watching this on YouTube, leave a comment below. I always check the comments. If you have any questions, if you have any comments, feel free. I do check and answer them personally. In the meanwhile, let's be careful. Let's remember what we're doing with earnings. I did not have time to get to that today, but estimize, right? Make sure you're aware of what's coming up, not only this week, but think about, this is the 26th, right? I'm actually asking myself, what earnings am I going to get mid-November? What is 2 weeks out from today? By the way, I'll follow up on this video tomorrow, because tomorrow I'll be doing the futures video. So check out the futures video here at YouTube or at the Simpler Trading website, and I'll walk you through what I see as potential setups for the second half of November. Yes, gang, that's how far ahead we want to set up these earnings plays and then choose which symbols have the best opportunity for us. So I'll be starting around the middle of November and then going into about the middle of December for those potential opportunities. All right, so check that out tomorrow. In the meanwhile, as always, gang, thank you so much for tuning in. I'll see you in the next update.